You may know Stephanie Link has been a big proponent of investing related to India. Now she has sold that position, but she's deployed it somewhere else outside the U.S., and that is Brazil.
Brazil.
The EWZ.
Yes.
Why so?
This is much cheaper than the INDA, but I still do like India for the long term, for the next decade. But I do think this year sets up really well for Brazil. They're growing GDP at 3.4%. Their fiscal and monetary policies are easing, which I think will propel the economy to grow even faster. And of course, it has a lot of focus on manufacturing, mining, agricultural. So that's really where I want to be. But the top 10 positions in the EWZ is really financials. There's two that are very big in this ETF, which I also want exposure to.
Can I get a 1 year of India, please? Because that's not really going to show you anything.
India didn't
right
do
there.
well last year.
Yeah.
It really didn't. It was flat. And I was very tempted to actually add to it because it didn't do much.
Basically sideways.
Yeah. But the prior year it was up 25%. So, I mean, I still like it very much. If I had cash, I would have held on to it. So I'll look and see if there's other places that I can sell and maybe add back. But I do think Brazil outperforms India this year.
It feels relevant, given this call we got from Deutsche Bank today, which says they're still bullish on the U.S. and Europe, but they closed their tactical Europe overweight. So, I mean, there is a lot of conversation, Josh, out there about U.S. versus other areas of the world, as other areas of the world outperform the U.S. by a large margin last year, and some wondering whether that's going to continue.
Yeah, and the most fascinating thing is that while many, I would argue most, of the developed market country stock markets outperformed the U.S. and many of the emerging, a lot of it was because of multiple expansion. In the United States, our large caps actually outgrew, in terms of earnings, what their share prices did. So in many cases, we had multiple contraction. I don't know when the last time you could say that happened was. And that gives me the ability to answer your question in the affirmative. Absolutely. If we see that multiple expansion, that re-rating that we saw for developed Europe, developed Asia, et cetera, if we see that justified by increases in, God forbid, revenue growth and profitability for these companies, which is a huge focus overseas, absolutely, this could go on for 2 years, 3 years, 4 years. We've seen it before. I know people under the age of 30 haven't, but believe me, it is a thing, and it can persist for a very long time.
I see you're repping the U. You're putting your heart where your wallet is, quite obviously. You're on the bandwagon.
Forever. Forever. So I believe in diversified portfolios.
Yeah. All right.